Hi everyone, Jeff Spires here from LEOpropcrowd, and I'm joined today by David Johnstone, who's the MD of LEOpropcrowd. Now, one of the main questions I always personally get asked when I'm talking about crowdfunding for property is what is the difference between equity and debt? So David is here to explain to us.
Okay, Jeff, thank you for that question.
Yeah.
So within the crowdfunding arena, there are actually two main types of FCA, Financial Conduct Authority licenses to operate. You have what's known as debt, loan, or peer-to-peer. They all come under that same umbrella. And in a debt or a loan type platform, there will normally be security offered for the investment. There will also be a fixed return that's clear and verified, and there'll also be a time frame fixed. So it might be if someone was to invest £10,000, it might be an 8% return for 3 years. So those three elements are in a debt or a loan or a peer-to-peer.
Okay.
On the other side, then we have what we call equity crowdfunding, and it is where there is an SPV, a special purpose vehicle, and that SPV purchases the property asset, and then investors can buy shares in that SPV. So effectively, there isn't security as such. There's no charges over property assets, but the investor actually owns part of the asset, thereby with the security. But the big difference is within the SPV, there isn't a fixed return or a fixed time frame. It just depends how the project actually runs.
Yeah.
So if the SPV was renovating a building to perhaps then sell off or to maybe rent as an income product, there could be things go wrong within that journey, and that's all part of the SPV. So if it goes really well, then you share in the profits, and if it happens not go so well then you also share in the losses. So it's higher risk, but offers better rewards as well.
Okay, so one's more like business, so you're buying into shares into that property, and the other one you're more like a bank style.
Correct. One, you're effectively loaning money.
Yeah.
The other, you actually own part of the business, which is the exciting part.
Yeah.
And sometimes individual investors do both. They use some of their funds into loan debt type products, and then they want to have other part of their funds with the potential to earn higher returns. And some enjoy the journey of being part of an SPV project.
Absolutely. So it's about diversifying your portfolio as well, looking at all these different areas.
Correct. Of course, we never give any investment advice, of course. We simply provide information. But I think it's logical for an investor to diversify their funds over a number of different projects.
So another question I get asked all the time as well is property bonds. Because another terminology that's in the development world you're used to all the time, or in the lending world, but for everyone else out there, what is a property bond?
Yeah. That's a great question, Jeff, because property bonds are, I think, now becoming more and more popular among the property investment world. And really, a property bond is similar to debt and loans in that a bond will offer security in most cases.
Yeah.
It will offer a fixed, defined interest rate of return, or a coupon as it's often called, and again it'll be for a fixed period of time, 2, 3, 4 years. So it's very much looks like, tastes like, smells like, and feels like a debt instrument.
Right.
However, a property bond is allowed to sit on an equity platform.
Right. Okay.
So in our case in LEOpropcrowd, we offer both equity, the SPV share option, but we also offer property bonds, which gives people the comfort of being in more of a debt type product rather than maybe the extra risk with the SPV model. So we offer both, and I think property bonds, I think, will become more and more popular because it is a really good vehicle to create a pot of funds that then allows the developer to have like a hunting fund or a war chest, and allows them to move quicker in the market, maybe a property auction, or if they see a really good deal, they know the funds are in place, they can access them, providing they meet the criteria of the bond. So I think we're going to see a lot more about property bonds and crowdfunding in the months ahead.
Excellent. Well, thank you so much for coming down and talking to us through those points. I know there's been a lot of interest around those specific questions. I hope that answers it for you. So make sure you go to our website, LEOpropcrowd.com, read the terms and conditions if you need to, register on the platform, and you can reach out to us at any point and ask us any questions, and we'll be happy to assist where we can. Thank you very much.
Thank you.